What's up, everybody? It's Stephen A. Williams, president and founder of the creditrepairshop.com. And in today's video, I'm going to talk about what everyone, almost everyone, has been asking me to make this video. I made one a while back, but they wanted me to put it in relation to what I had to do to go from a 430 credit score all the way. Now I'm in 854, 860. That's my range on my three major credit reporting bureaus. And they said, I made a video on what you would need to do, or what, how the system is kind of put together, on how they judge you on putting together your credit score. But a lot of people were asking me, tell me how you did it. That's why I come to your channel, because I want that personal touch. Like when I talk about stuff, I talk about things that I had to go through, because I believe that the things that I had to go through will make you, it will either uh, relate to what you're going through, and it will also give you strength on the inside to say that, hey, he went through it and it was tough for him. And I think that I could do it too. So the first thing that I had to do was I had to repair my credit. Now, just in case you didn't know, in 1990, my wife and I started our first company. We still own it to this day. It's called Blue Book Milwaukee. And you can look it up online, Blue Book Milwaukee or Blue Book MKE. Go to bluebookmke.com. Started that business. I was third shift security guard right out of the U.S. Army. That was the best job that I could find at that time. I was getting paid $6.84 per hour. That's how much I was making. No, $6.25 per hour. My checks every 2 weeks was like $384.64 every 2 weeks. And so we started our first business in advertising. I won't go into how we got into that business, but we did not go to college or anything for that business. We just really jumped off the deep end into it, because we thought we could make it. And but after 8 months of building that business, going to work at 8 p.m. to 4 in the morning, and then getting a couple of hours of sleep, and then getting up and working our business, our advertising magazine business. After doing that for 8 months, I was making a good income. But like, it was like at that time, about $36,000 is what it would average over the year. Now, if you look at what I was making as a security guard and look at what I was making as owning my own business, of course, you're going to make that decision to leave that business. So eventually I ripped myself away from it, and we were on our own ever since I believe it was March of 1990. We were like off on our own. And but one thing happened over the next 4 years. We got to where we were making over $100,000 a year with our business. I mean, going from barely, making no money to making good money to making a lot of money. And what ended up happening is we just end up doing what a lot of people do, what you probably done in your life. That's why you're watching a video on credit repair and building credit, is that you end up blowing your money, spending it on things you shouldn't, not taking care of stuff, getting over your head on payments. That's what we ended up doing. We ended up owing over $300,000. We were $300,000 in debt. So we went from making very little money to making a lot of money, and our situation was worse. It's just that we had money coming in, but it was just as bad. It was even more stress, because people were looking at me and saying, "Hey, you're living on this huge farm now, in the horse business, got cars and everything, and you really don't have any money." And we were struggling very bad. Uh, it's a different type of struggle when you have money coming in, a lot of money coming in, and you but you have a lot more in debt that has to go out, it puts you into a weird situation where you're thinking like, what did I do all of this for? And so Christmas of 1994, we sat down, my wife and I sat down, and we made a decision that we're not going to live that way anymore. And there's a lot of benefits that come from that decision that I didn't even really understand. I was only 24 years old at that time. But one of the big things is that I think that it saved my marriage because we're still married to this day. Now, we got married in 1990. Uh, it's 2021 now when I'm making this video, and we're still together. Many of our friends that got married or were together at that same time, uh, I don't even think any of them are still married. None of them are still married to the person that they were married to at that time. I don't believe none of them are. And that's because finances could be one of the number one things to break up a marriage. Not to say that it's the only thing, but that's one of the things that breaks up marriages. So we sat down and we said that we were going to work our way out of this debt. And the way that we worked our way out of the debt is exactly what I tell you to do with the stuff what we do with the credit repair shop, but it's even more enhanced. I didn't have someone telling me what to do. I was basically my wife and I were like making moves and saying, did that work? Did that work? That worked. That didn't work. That worked. That didn't work. But basically, from 1994 all the way to 1999, we just destroyed our credit and we went through a process of paying off debt, settling debt, going to court, settling debt, doing all types of stuff just to get out of giving cars. But we had 6 cars, giving 4 of them back, and just keeping one for me, one for her. That was it. Uh, bare bones and everything, and just getting our way out of debt. So the first part of it was lower the debt or minimize debt. From what we did at that time is we just paid off all of our debt, ended up paying off all of our debt. And I know that everyone isn't in that situation to where they could do that probably the way that we did it, but it took us from 1994 all the way to 1999. So it wasn't something that was like done overnight. And it took a lot of willpower, and we just made it into a habit of doing that. And what we had learned at that time is that we were able to save a lot of money once we started paying attention to where our money was going. And that's what I encourage you to do. So step one of it uh, was to get that whole thing under control, and that was paying off collections, all of that stuff. And then the next part of it was to repair our credit. And once we went through the process of repairing our credit, it was we got it to where we probably were floating. At that time, when I had finished, my credit was 430, like it was low. And for for me, I thought that was good for some reason, not because based on what I saw with other people. It was based on that I had fixed everything that was wrong. Nothing was on there saying that I owed anything. Uh, and like, so that was good. It's just that I just had to do nothing but build up. So from there, this is what I did. So after the credit was repaired, and the process of the credit repair process was, uh, which is what we do now, but I didn't know that I was actually doing that, was to verify, which would be to validate, and then to settle. That's what I was doing at that time. With the credit repair shop, what we do is we uh, validate with original creditors, debt collectors, and then verify dispute with the credit reporting agencies to see if that item can even legally be on an individual's credit report. So that's like step one. You got to go through that, or you're going to be like having the puzzle all mixed up. So step one, we got our credit repaired. And then step two was I had to get some type of trade line on my credit reports. And because if you don't have credit that you're paying on, you're basically missing one of the most important pieces of the recipe to build your credit, because this is what one major piece on how they're going to rate you as a risk. And your risk rating is what your credit score is, if it's going to be low or high. So basically at that time, what we ended up doing is I ended up getting my house and a car that I financed. And at that time, I don't know if I got a great interest rate. I know it wasn't what people were paying with Santander and all that. I was probably had a rate somewhere in the 6 or 650, 6.5 rating. But for years, because number one, I didn't want to get back into debt the same way. I didn't even get a credit card or nothing. I just had one car, house. And as a matter of fact, when we got another car, we had paid it in cash, which I'm going to say is not a good thing to do when I look back, because I could have invested that money uh, and made more money and just used the car as long as I wanted to use the car, and either give it back, or just it would have been like I do now. I got one of my cars, my Mercedes. I've had that for more than 13 years. Um, keep my cars a long time. But so I had one car in my house for years. Years I had that, and my score was just going up, 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 slowly, up, 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 up. So then number three is the payment history. So you got number one is where you get your credit repaired. Number two is you got to get some primary trade lines. And for what I did is I had one car and my house on there as the primary. And then number three is that payment history. You want to let that payment history, uh, no late pays, pay on time, uh, you know, just make sure that you take care of that. And then number four is you just got to give it time to mature, which is one of the things that a lot of people have a hard time with, because if you get a loan, you can't, like, make 2 years pass overnight. But for some reason, sometimes people think that that's the, so you have to let it mature. And when you let it mature, which, you know, all of a sudden you're going to look up, it's been a year or 2 years, and you had that good payment history on there where you never missed any dates. It's showing all green on your credit reports. And that's another thing, is you do need to have a monitoring service, because you need to know where you're at. Look at how at everything that you're doing, on how it affects your scores, because you'll see that your scores will go move up and down, basically on what basically off of what you're doing with your payments. But for what I was doing, it was basically just like slowly increasing, because I didn't have any credit cards or any uh, you know type of accounts that would make it have those mass fluctuations within from month to month. And I'm going to go into detail about those, because the number five step, the fifth step that I did, that really ended up blowing my score up, and it was something that was not really done intentional to make my scores move up. It was actually done because I had actually went through an embarrassment where I was out of town in Atlanta, I believe, at that time, and the rent-a-car company, which we had always used, I'm talking about for years, traveling from to Las Vegas, to Texas, to Florida, all over the place. We would use, I think it was Enterprise Rent-A-Car, and I just had debit cards. I never did use major credit cards after I went through what we went through in the 90s. And so we, we went, like, after all of these years, I think it was around 2008, went to rent a car, uh, in Atlanta, and they said that they do not accept debit cards anymore to rent cars, even if you do have your ticket that you're going back to where you came from. That was one of the things that they made a stipulation. Like if you came into a place, you had to show your ticket that you were going back or your itinerary that you were going back. So they gave them a little bit more of a comfort that you were going to bring the car back. But policy had changed, and it had changed without us even knowing about it because they had let us make the reservation with the debit card, but when we got there, they said you had to have a credit card. So what ended up happening is my son-in-law, uh, we had to end up using his card. My future son-in-law ended up using his card to actually do the rental on the rental car. And then when I think on the plane trip back, I had applied to get a credit card because I was like, I can't go through this. We're going to be doing a lot of traveling and can't go through that. So, got approved. And one of the things that I saw, which I knew was going to happen, but I guess I didn't know that it was going to happen, that it was going to jump as much. But at that time, I believe my score was like in the 680s, 680, 690, and 700 is where it was at. Uh, and that's it, like it had hovered there for years, like it just had got up to a point and it had just stayed at that point there. But after I got that card, it had jumped all the way up to, I believe at that time, to 750. And uh, when I had had my credit ran for doing something, was all the way into the 780s. Um, so that was like the icing on the cake. And I had only just got one card, like I didn't do any other cards. And then later, I had uh, was looking around and just looking at different opportunities that I could use for the stuff that I spend with my businesses. Um, just to different vendors and stuff like that. And I was thinking, I had saw one of the commercials talking about the points, and I was like, if I add up all of this stuff that I spend, how much in points would I be getting back on a monthly basis? And it was something like 900, 800 to $1,000 per month for stuff that I was already spending. So what I had ended up doing is I ended up getting an American Express card, gold card for all of my businesses, and I used that for a lot of the, you know, pay, like stuff like supplies or advertising, things like that, people with companies that would accept it. And when I got that, it even jumped my score all the way up into the 800s. And now where I'm sitting at 850, I think one was like 834, 850, and 854, uh, somewhere in that range. And the highest that you can get is a 900. So that was like my strategy for getting my credit to, and that took a lot of years. So I know for you that are watching this video, you're going to want to know what is the strategy to get it done in the shortest period of time. Well, step number one is always going to remain the same. You got to get your credit repaired right away. And then step number two is anything that you're paying on right now. If it's your electric bill, your cell phone, get that type of stuff. Make sure that it's reported. If you're paying on a card, don't miss any payments on it. Make sure that you don't have any late payments, nothing. You got to keep that. Those are like would be like your primary trade lines, things that people ran your credit to be able to give you credit for. And then if you are in the position, if you already have a home or if you're, renting, you want to make sure that you have that stuff reported on your credit because that's going to be like showing that you are very responsible. So once you have that stuff covered, you have, you're taking care of what you have so you don't go and get into something that you can't afford. And then you've gotten and also you have your credit repaired, then the next step is you can start looking at adding a trade line or some type of account onto your reports. If you don't think and you can get your credit reports and evaluate them. You know where you stand. You can see if you think that you would get approved because for a credit card. Because if you get approved for a credit card, not a secured card, talking about a major credit card, and you utilize that the right way by keeping the balances low, you will see that you will have a huge increase in your credit score, and then that you can actually use that system to build up and do similar to what I did, is where you would add other cards to it. But don't do this if you're just going to be adding cards and using the money and making another payment that you can't afford. I would rather you just allow your credit score to mature by you paying on the things that you can afford. Now, if you need to have an immediate boost on your score, like you're trying to get something, or you need to get that score up to a level because you got something planned for the future, something that I would suggest that you can do, and this can also help you get a major credit card, is you can get an authorized user trade line added onto your credit reports. Now, let me tell you about the benefits of doing that. Is that when you have that information placed on your credit reports, in a way, you're piggybacking off of the good payment history, the large available balance, and the low credit utilization from that individual. That's why you want to make sure that they have the big three: good payment history, large available balance, and low utilization of that balance. That means that if they have a $10,000 card, maybe at the most they use $1,000 of it, and they make payments on that. Haven't missed any payments. They make good payments. Having that type of account, even though it's not a primary trade line, having something like that picked up and just like inserting it onto your credit reports will increase your scores a lot. Uh, People do this all the time. This is not something that is not legal to do. People do this all of the time, and it jumps their scores up. Uh, I know people who have done this, uh, put it on their unauthorized user on their reports. Within the next month, they were able to get approved for their own credit card, which made that was a primary trade line. And even when that authorized user account went inactive, their scores were still up in a good level, and it didn't even drop because it actually went up because they got a credit card of their own, another credit card of their own. And again, they did that off of something that they were able to afford to do, and they had a plan on what they were going to do for getting their credit increase. Like everybody needs to have a plan when you're looking at doing stuff like that, because you don't want to just get cards just to get them. You don't want to just get cards to just get the money and then go out shopping, and then you have all of these payments that'll put you right back in that situation again where you're just having all your money go out the payments and you just feel like you're trapped again. So just to review, number one, you got to get that credit repaired. You got to That's like number one. If you skip number one and you go to the other ones, your puzzle is going to be all mixed up. And just imagine someone looking at it that's looking at offering you credit, and you have authorized user trade lines, uh, on there, or you got some other stuff somehow placed on there, but you have bad credit. They're going to look at you and they're going to be like, this just doesn't even make sense when they look at it. So they're going to just deny you. So number one, first thing, get that credit repaired. Whatever it takes, go through the process, get it done. And then step number two is pay on the things that you have credit on. Don't miss any payments on there. If you have a credit card, keep that usage down to a minimum. I would say 25 to 30% at the most of what your available credit limit is. That's what you need to keep it at. And then also pay attention to your statement dates. And this is what any of your other payments that you have too. There's a statement date that they report to the bureaus. And even if you don't miss the payment by the late payment date, uh, by the way that they have it on the document on your due date, you can actually miss the statement date, and it can look like you have a double amount of a balance for 1 month, and then the next month it would even itself out. But if you're trying to do something in that month, that's everything's going to be reported, and it's going to end up making your scores go down a little bit because it's going to say that you're carrying too much debt. None of your debt has changed from the past month, and the system is put together to know by the payments that you're making on stuff like your car or student loans or stuff like that, that your payments need to be coming down, because the system is just built that way to know that if you have a car payment and it's due every month, and you cross a month and it wasn't paid by the statement date, they're going to say, automatically the computer algorithm for the reporting agency is going to say drop the score down, even though you didn't miss a payment, and it may not even reflect that you missed a payment. It's going to still drop it because your debt to income ratio did not change for that month. And it's just anticipating that you're going to miss that payment. And yeah, it'll be a wash the next month, but why go down that the month that you're about to go through? You're going to go through a whole nother 30-day process. And that's why, if you've ever been wondering, why does my score go up and down and I don't even miss any payments? Because you're missing the statement date. The statement date is when the company that you have credit with is going to report to the credit reporting agency. So be very mindful of that because it plays a huge part in allowing your credit to what I call mature. That's what I call it. And then number three is that payment history. Just don't screw up on that pay. I don't Whatever it takes, you can't screw up on that payment history because you can't go back in time and fix it. It's going to be very hard to fix when your credit score, I mean, when you miss payments. A lot of people try to get 30-day late payments and stuff removed. And, when you're dealing with an open account and you're going to be disputing a late payment and you were late on that, that's a tough mountain to climb. It can be done, but it's a tough mountain to climb. And some creditors, especially credit cards, they're like saying, hey, if you're going to just be disputing this whole thing, we don't want you as a customer. And then what are you going to do? This is like their tactic that they've just put together and said, hey, if you get too many disputes from the customers that we have open accounts with that we're letting use our credit cards to go out and buy stuff, just cancel their account and let them go to someone else. This is what they are doing. So be very careful. And this is one of the big reasons why we do not challenge late payments on open accounts, because they can do that. And you also have to be very careful when you challenge an open account. I'm sorry, when you challenge late payments, even on a closed account, because what if you have 23 months of good payments and you have one late payment? Something that the companies could do is they could just say, we're going to wipe away all of it. You don't like it that you missed the payment, but we reported all of the other months that you did make your payments. Just let's just take everything off. How about that? And then your score drops because you don't have a primary trade line that you used to have reported on your credit reports. You don't have that anymore. And then your score drops down, and then you're trying to say, why don't you report that stuff? And then they're like, hey, you disputed that. We had an option to just take it all off. So to safeguard against all of that is just, you're gonna have to make it a habit, make it a priority to not miss the payments. Pay the bills on time. Even if you forget, uh, either do an electronic transfer to make sure the payment is done on time, or send it next day mail to make sure that it's on time, because the way that it will hurt you on your credit reports, you need to just be mindful because you don't want to have to go through that process. And then number four, which is what a lot of people just have a hard time with. People have a hard time with this with a lot of things is that you got to let it mature. You got to give it time. A lot of people say, I don't have time, but they forget that they were 20 years old and now they're 40 years old. So you got a lot of time. What you had to do is you had to utilize, make good use of the time that you're doing. What I see a lot of people do is they say that they don't have enough time. And what it really is they're focused so much on what they don't have in relationship to what they do have. Look at what you do have and you make the best of that, and then you make decisions on how you're going to move forward. And I gave you one of the strategies that a lot of people use, which is authorized users, user trade lines placed on the reports. But even without that, it's just to allow stuff to mature, and you will see that your scores will increase over time. You just got to give it time. And then number five, with the algorithm of getting a major credit card with a nice available balance, that's a primary. That will be like the icing on the cake. It will jump you uh, very high in the scores. It will also, over time, you're still gonna have to make those payments on there and build that payment history. But that will give you like the ultimate, uh, do, you know, opening the door for you to be able to get whatever you want by using your credit. Not to say that you should get everything that you want if you can't afford it, but it will give you that opportunity to be able to get the things that you want by utilizing your own credit. So I hope that that kind of cleared up and gave you a little bit of perspective of what I went through to build my scores up and what you can do. If you need help with your credit, please visit us at thecreditrepairshop.com. If you need your credit reports and scores, please go to the website the number three scores.com. If you need authorized user trade lines, we have that. The link is below this video. You can get those. And if you need assistance with, you got debt collectors coming after you, you need a statute of limitations letter, a cease and desist letter, I give all of those letters for free below this video. So thank you again. This is Stephen A. Williams, President and founder of the creditrepairshop.com. Thank you, and until next time.